Today is Wednesday, April the 15th, and we certainly do have a zigzagging market as we were planning for. So, as I said yesterday, I wanted to get a better opportunity to buy into Home Depot, and I did. Volume was particularly low today, as we're going to see when we look at comparative volumes, and it just wasn't a good day overall. The market did drop at 10:30. It typically reverses at 10:30, and then again later in the afternoon. And we saw it climb up, not too much. Everything's pretty much in the red. We did have we have J&J because of the coronavirus vaccine they're talking about, Abbott because of the coronavirus test kit that I think the FDA has just approved, and they should be able to provide millions of them in the coming months. Everything else in P&G because they raised their dividend by 6%. But everything else was advancers and decliners, 4-1 in favor of the decliners, which takes our oscillator down to the overbought line. We see it a little bit better when we look at our other spreadsheet, manual one that we keep, and you can see that it's similar to what we saw back in late 2018. Up, down, up, down, up, down. And if we're going to repeat that, then there's going to be some more downs. The summation index, however, is ticking up quite nicely, and it wasn't long ago that March 24th, that it was at minus 2,800. It's now down to minus 550. So let's look at our volume. The buying volume was almost non-existent today, and the selling volume was higher than we've seen since the beginning of April. Overall volume was a little bit less than yesterday, so we've had 3 days now of pretty weak volume, more than what we saw when the market was hitting its high. When the market gets up that high, you see volume started to taper off. When it gets low, similarly, you see when it starts to turn around, you see volume tapering off as well, because people just aren't sure of the direction of the market. If we look here, we see an example of that. Here, when the market was at its top, we had fairly low volume. Market got down to its bottom, and we had this exuberant buying, and then the volume started to taper off. More exuberant buying, and then the volume started to taper off. So the market now is just not sure what to do. But since 60, 70, 75% of the market is all computer trading, you really got to wonder where the real traders are. Probably when you take out the computer trading, there's not a lot of trading going on. There's not a lot of human trading going on. So let's look at the S&P. First of all, let's look at the VIX. The VIX popped up a little bit more and just stopped at the 8 EMA. The S&P is still looking at what happened to our Gartley pattern. Let's put it back in there. The S&P is still on target for its Gartley pattern. You don't want to see anything certainly below this green line. That would negate the Gartley pattern completely. I wouldn't be too excited if it went below this point here. I'd start to think the Gartley pattern is getting weak. But we can see it there. I'm going to introduce some new stocks because Zach was talking in the comments, was talking about the FANG stocks, and he wanted us particularly to look at Nvidia, Netflix, and Amazon. Let's look at Apple first. Apple had the resistance at the cloud yesterday, which was also 61.8% retrace, so it's quite typical that the cloud would act as resistance in the first case. So that's what we expected. We're moving into an area, however, where the resistance is a little bit less, and it's going to give Apple an opportunity to move up later this week, probably into next week. Let's see, Caterpillar down $5.40. Now its Gartley pattern is in real danger. You wouldn't want to see it go any lower than this and still think we have a shot at the Gartley pattern. But maybe the Gartley thinks that it was complete by hitting this first target and then getting resistance at the 200. So I'm about a couple of days away from getting rid of the Gartley altogether and saying it's a failed Gartley, and it was the 200 that killed it from getting to its second potential target. AT&T down $1 today. Home Depot, I did buy some today. I bought it at just a little bit over 200 because I had sold some at 207. So I bought in at 200. I also took my 190 April short calls and rolled them into June and lost about $1.80 on the April calls, which isn't bad, but I was able to roll into the June 200, the 190s. I took the 190s, rolled them from April to June 200. So I'll be able to collect another $1,000 on the stock, plus the amount that I rolled, which was about another $1,000. So I'll be $2,000 better off, but I'm going to have to wait for June for that to happen. We're looking at this very, very thin cloud here, which is where it's headed. So let's keep an eye on Home Depot. It's still a great stock to have, and in 100 more shares, I'll be tapped out and I'll have my full position. Now let's look, we can look at Whirlpool because we always do, but let's look at our Nvidia. Nvidia has this interesting pattern, which is what we call a bat pattern, where you get a 38.2% retrace and then rejection off of there somewhere into this area here, the shaded area. And then you've got two targets that are set. One, which is double the distance of B to C, which we've already hit. And the other, which is 1.13 of the full down move. So if you're looking at Nvidia, it's hit one of its targets. It's now, when did we hit the target? Back here, April the 4th. So it's 1, 2, 3, 4, 5, 6 days after that. A little pullback would be an opportunity to buy Nvidia or to buy some call spreads on Nvidia. Haven't done any call spreads during this coronavirus thing, but I may be doing that shortly. Netflix. Netflix, like Amazon, is at an all-time high. And the butterfly pattern, which we see here, because a butterfly is 78.786, that's a Fibonacci number, right? Retrace of X to A, then down to C, which it hit perfectly, which is the type, could be anywhere in this range, but it hit 38.2%, so it's a 38.2% drop of A to B. That's a harmonic, one harmonic, two harmonics, and the next one, which we've already hit, which was today, was 427.55. Now there's another target to be had up here, but we've hit this one, which was 1.27 Fibonacci number of XA. And the next one is just a little bit higher. So you could say, well, we've hit them both, haven't we? And there isn't another one in sight. So we could go, I mean, you can exceed it anywhere in this cone range here. But Netflix may have finished. And what happens after a butterfly like this is that you have an A, B, C pattern down. 3 legs, 1 leg down, 1 leg up, 1 leg down. And then you have the possibility of forming another Gartley pattern. So that's Netflix. Amazon, also at an all-time high, pushed even higher today and then pulled back. Why are we losing our Gartley patterns? Let's bring it back in here. And you can see that it has also This is a true Gartley. So a bat is at 38.2, a butterfly is at 78.6 for the B, and a true Gartley is named after the mathematician who discovered the whole thing. The name was Gartley, was 0.618. That's a Fibonacci number. Now we didn't quite hit that 0.618, but we came very close. And then we had this beautiful pullback, which was just where it would be expected to be. Right back, whoops, let's undo that move. And this one was right into here. So that was a perfect pullback down to 38.2% of the A to B move, harmonic, harmonic, and now it's made both of its targets. Now the Gartley doesn't have an extended target higher, but so we'll draw a Fibonacci on this here, X to A, and see where we can be going. And we've hit 127.2. This 23 and this 14 are not important Fibonacci's, but the 127.2 is. Now, it wouldn't surprise me now if we had an ABC correction down before Amazon goes back up again. So we're going to look for that. Facebook has a bat pattern, 38.2 happening, and its first target is going to be 183.35, which we've almost hit. Then you've got the 200 up above. What else do we have? Google. Does Google have a pattern in here? Let's do an auto harmonic in there. And we don't. So Google doesn't have a harmonic pattern that it's driving to. It stopped at the 200. So it's pushed through the 50. It's now stopped for 2 days at the 200. Buying opportunity or more resistance? That's what we've got to ask ourselves. Apple released a new iPhone today, the iPhone SE, which is a 4.7-inch screen, like in the iPhone 6 days, which is priced at $400, $399. So that's a good price. But look at Apple. The Chiku span now has managed to stay above this candle. Tomorrow it's got to stay above that candle, or we could put a little marker in here so we remember it tomorrow. Otherwise, it'll fall. If it falls below this candle, then we're in trouble. We're up to 12 minutes. That's too long. So thank you very much. Where are we going tomorrow? The McClellan oscillator would tend to tell us that we're going to have another bounce here tomorrow. So we could see a day up. And what we'd like to see is a McClellan higher than this point to show that the bulls are in charge. But if we get a lower one, then the bears are exerting more pressure than the bulls. The money is coming out faster than it's going in on a 10% and 5% moving trend basis.